Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. A fourth bearish black crow on Friday, but it was also an indecisive spinning top. In part, I believe that is related to the market dropping down and hitting the medium moving average support currently at 69.14 and getting held there. However, let's take a little step back. Now, I mentioned last week how the indecision seen 2 weeks ago, that on a daily basis eventually led to a fourth consecutive countering move after the market bounced up off the January high at 69.10, seemed to have slowly finalized. Now, I was not comfortable saying that it had ceased. After all, just look at Friday's action. But the market is heading the way of the weekly key reversal down made 2 weeks ago. This test on Friday of the January high once again at 69.10 and the gentle rising medium moving average currently at 69.14 are all part of this. I suppose all this can ultimately be traced back to the failure on the 16th of June to break the projected 50% Fibonacci line overhead at 72.15. Personally, as I said last week, I have a concern about this market. So far today, a gapping move lower, a large one, opening below the January 2021 high and the medium moving average, then punching down through the March 2020 high at 68.71.5 as well as the May low at 67.99 to form what looks like right now like a bearish opening black Mariposa. Now, prices have slowed now after breaching the May high, but I suspect May low I should say, but we do not have any significant support below until the rising long moving average currently at 66.30. It all now depends on where we close tonight. German DAX futures. A second bearish black crow on Friday and a suitable follow-on lower after the previous session's bearish black Mariposa, coming as it did after the prior 2 sessions made consecutive if opposing indecisive spinning tops that whacked into the overhead resistance of the all-time high made in June at 15.06 and ended up getting nowhere. This is all, as I said last week, deeply disturbing. The move on Friday saw a second consecutive close below the 50% projected Fibonacci line at 15.629, a level that had acted more as an attractor for the market. The real support nearby was the gently rising short medium moving average currently at 15.517, which was breached, but still saw a close over it. A little further down, we have the medium moving average currently 15.222. I warned last week how the action on Thursday last week, and now I suppose all of last week, was not as supportive an outcome as many I suspect would have hoped, especially after May's monthly key reversal up. It seems still to be, as I detailed in the final 2 weeks before my annual leave, all getting a bit precious now. So far today, a much lower opening market and a move lower today, below the short medium moving average, down through the not so strong October 2020 today uptrend currently at 15.445, and down all the way to test and breach the medium moving average below. Now, so far, well, the medium moving average has been beaten up, but is not yet broken fully. Further below, unlike London, we still have the May and April lows at 14.806 and 14.833, respectively, as well as the old September to November 2020 reverse head and shoulders neckline currently at 14.628, before we test the long moving average. Actually, I'm not that confident about that neckline, personally. It all depends on where the market closes tonight. Like I said earlier and last week, it is all getting a bit precious now. US E-mini S&P futures. A second bearish black crow on Friday and a close below the significant 50% projected Fibonacci line at 43.43. Let's take a small step backwards on this to get a better view of what is happening. So, 3 weeks ago, we had the break upwards out of the not that distinct rising wedge pattern formed over mid-May to late June. The target on the top side, that is target X, is in the 44.12 area. come close to reaching up towards that number, but 2 days ago we had an outside day. That's the lesser cousin to the key reversal, and it looks like we've had issues trying to punch up through the 43.85 area. This leaves a question mark on whether the market can make it up there at all. Last week, on Friday, it moved from being a small question mark to a medium-sized question mark. The nearby support of the 50% projected Fibonacci line at 43.43 was no longer there, but the upper trend line, currently 42.94 of the rising wedge pattern, was still there. This did look like we might have a possible only, false break higher. Now still further below we have the rising short medium moving average, currently at 42.50, and the medium moving average, currently 41.52, plus a 100% projected Fibonacci level of 42.02 and two 50% projected Fibonacci levels at 41.81 and 40.82. So far today, a slightly higher open, but then a move down, a significant move down, back below the upper trend line of the rising wedge pattern, which, depending where we close tonight, may put that pattern back into play. We've not yet reached the short medium moving average below, but that is the next support underneath. It's a worrying development for the bulls out there, and it may mean looking up a possible break lower levels for that, though it is still early as yet. French CAC 40 futures. A second bearish black crow on Friday, and also a bearish closing black Mariposa, though it's not the best example of such a daily pattern. Since mid-June, this market's taken a course of 2 steps down, followed by 1 step up, and then again 2 steps down, etc, etc, etc. Friday was the most recent episode of this dance, with a bearish closing black Mariposa after a more convincing bearish black Mariposa. However, it was nevertheless a significant move on Friday, as prices punched down through and closed below both the old 50% projected Fibonacci line at 64.81 as well as a short medium moving average, and that's currently at 64.78. Meanwhile overhead, the short moving average, currently at 65.24, is actually the cap of sorts on the market. Now on Friday I drew a new downtrend, currently at 65.45 from the high in June. It was then very much a prospective downtrend at that time. However, I'd like to expand on that idea by drawing a lower trend line from the late June and early July lows, currently at 62.79. You can see it on the daily chart. You see, between these two trend lines we have a possible descending, expanding wedge pattern. Interestingly, though it is early, it has already fulfilled the total number, that is 5, the total number of sum of touches necessary on both trend lines to be a respectable pattern. I suspect I may have to start giving ideas on the size of moves on any break of trend lines, and soon. Now further down, well, really don't have that much until we reach down to the 50% projected Fibonacci line at 63.48, and then the rising medium moving average, currently at 62.94. Now so far today, a big gapping move lower, down through the 50% projected Fibonacci line at 63.48, and only halting near the combination of the April high at 62.81, the rising medium moving average, and the lower descending expanding wedge trend line, the new one. Watch this space. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risks involved in the disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. Here comes the final bit.